Many of you want to become millionaires, and some of you might have already crossed this milestone. This is for both parties. People say the first $1 million is the hardest to make, but today $1 million is not what it used to be. See, the catch is, you first need to have $1 million to really understand that it honestly is not enough. But let's say somehow you got your hands on $1 million after taxes. Maybe you sold your first company. Maybe you got lucky and that famous uncle named Ron Nakadindo Mori, aka Daniel Playton, supposedly left you an inheritance. Or you just know $1 million is coming your way. The question is, what do you do? Not just what your parents did, but also how do you apply that wisdom to the options available today? So what would you do if you had $1 million today? I've asked our financial architects to help us go through the top 10 ways to invest $1 million in today's economy.
Abraham, you forgot to tell him to subscribe. Come on, man.
That's Johnny. Can you make sure to subscribe, shade in that bell, and once the video is done, if you found value in it, kindly press that like button. Thanks.
Number 1, buy rental income properties. Well, definitely $1 million isn't what it used to be and not enough to make you rich. But if you know what you're doing with it, $1 million could mean you'll never be poor again, if you place it in the right investment. $1 million invested in rental income properties will bring in anywhere between $50,000 and $100,000 per year in rental income. And this is straight up paying cash for your properties. If you know what you're doing and you are a sophisticated investor, you will be willing to purchase property using debt in the form of financing it. Therefore, expanding your purchasing power to even more real estate and collecting even more rental income. You've got plenty of options to choose from. Single family, multifamily, 2 to 4 units. And the sophisticated investor's preferred choice? Commercial multifamily property units. Anyone with $1 million can pick up a couple of apartments near the city center or around business centers and live off the rent. As mentioned earlier, $50,000 to $100,000 per year in rental income before tax might not qualify as rich living by any means. But if you're frugal, it means you and your family will no longer worry about food or bills again. The average property appreciates by 3 to 6% in price every year. Not only are you bringing in rental income, but the price of the property is also going up in appreciation and helps deflect inflation. And this is important, so pay attention. Your first $1 million, park it in things that make you money while you sleep, and then pretend you never had it.
Number 2, invest in REITs and syndication REITs. It stands for Real Estate Investment Trust. To put it simply, people with money, such as yourself, join up and put the money together in a management fund. The people who manage the fund to go out into the marketplace and invest the money into properties that generate income. Once the generated income comes in, then the money will be divided by how much every person has contributed to the fund. And these funds also have the added benefit of getting yourself involved into bigger deals. For example, buying and renting an office building is definitely more expensive than picking up 1 or 2 apartments. The type of deal that would be difficult to close on your own. It is important to know that if you are willing to put in the time, you can get better return on your own. But at this stage, it is all about saving your time.
Number 3, bonds, CDs, or promissory notes, never in a savings account. They're super easy to understand. You simply lend the money to a corporation or the government, and in exchange for your money, you get paid a fixed amount regularly. When the deadline expires, you are paid back your initial amount. If you need the money, you can recall your promissory note or sell the bond to other people or back to the bank before the term. You can find bonds in every country. You can buy government bonds directly through your national bank. Just walk in and ask about them. For promissory notes, visit Strategic Legacy Investment Group and look for their high interest liquid savings rate. CDs, referring to certificate of deposit, is another financial instrument where you basically agree with the bank that you leave your money untouched for a fixed amount of time, and in exchange, they'll provide you with a better interest rate. The highest return we've seen was under 2%, and they don't have the same flexibility response, but at least they kind of keep up with the inflation. But it's still better than just keeping your money in a savings account. We don't know about you. The worst thing for us is just having the money sitting around losing its value every single day. The US dollar is worth less and less. The government keeps printing money and shoving it into the economy in order to compensate for the impact of the coronavirus. And what does the marketplace do? It reacts by absorbing the money and raising prices accordingly. This is why real estate prices keep going up. This is why Jeff Bezos is worth close to $200 billion. That's why Tesla stock prices is going up the way it is right now. It is just the market absorbing all the new cash. We do not recommend keeping your money in a savings account for more than the short term. Do you know how much the bank pays you to have your money in savings account per year? 0.01%. Do you know what the average inflation rate is? 2.44. So if you keep $1 million in savings accounts for 1 year, at the end you will have $1 million plus $100. The Bank of America will effectively pay you and gladly give you $100 to keep your $1 million in your savings account.
Number 4, gold, silver, and other commodities. If the previous point freaked you out by the impact inflation has on your wealth, don't worry. There are many ways to protect yourself against inflation. The preferred option of multimillionaires to make sure the money keeps its value is to convert it to gold and silver. You can buy gold or silver index on any trading platform, but you can also go about it the traditional way. Simply go out and buy physical gold. Gold has been the go-to resource for store value since the Middle Ages. Smart investors move their money out of the marketplace into gold, resulting in predictable jump in gold prices and other precious metals. For sophisticated investors, the price of gold is a barometer of just how quickly features like the US dollar or euro are losing their buying power when you invest in gold. Although the prices goes up, the value remains the same. Your gold doesn't make you any more gold while you keep it in the safe. It's just worth more in today's money. If you want to grow your fortune, you need to technically beat the return that gold provides.
Number 5, the extremely popular index funds. This investment is especially popular among our average or traditional investor. Most people are first introduced to index funds through their employer when opening a retirement plan such as a 401k or an IRA, which usually might be opened through the advice of an accountant, or maybe even your child's college plan. This traditional investing option is where you park your money and watch it grow for you. So a random person asked Mr. Warren Buffett the following question: what would you tell someone to do with $1 million who's 30 years old, unmarried, with no dependents? Buffett responded, I would invest it in an index fund and then get back to work. So for those of you who have no idea what we're talking about, allow me to introduce you to the S&P 500. S&P 500 stands for Standard & Poor's 500 Index. This is an index that bundles together the top performing 500 companies in the United States. Now, these are companies that are based in the United States but may have operations anywhere else in the world. And if a company does poorly, it's automatically taken out and replaced with one coming up. So you're always invested in the top 500 based on their formula as to what top 500 would be. You're basically investing in the best companies all at once because of this level of diversification. You're almost guaranteed that you'll make money over the long run if the future performs just like the past. So if the next 20 years are as bad as the last 20 years, the returns would be similar. So what if I had invested in the S&P 500 over maybe 90 years ago? The average annualized total return for the S&P 500 index, not including dividends, over the past 90 years is 9.8%. That's almost 10% year after year for 90 years. Now, of course, past performance does not guarantee future results. However, if $1 million had been invested at 9.8% over 10 years, that means that money would equal $2.6 million today. Now, keep it there for 20 years, and that $1 million would end up with $6.5 million. If you're young and have time on your side, leave it for 30 years, and you'll end up, $1 million will become $16.5 million if that money is left for 30 years and not looked at. That is why even Albert Einstein considered compound interest as the 8th wonder of the world. This is how you make sure you never go broke again. You set it and you forget it, and your entire family tree could live off the interest once you retire. Now, of course, in no means is this a solicitation of securities, but there are many quality firms out there who offer products and accounts that offer the S&P 500 as one of their sub-accounts or options for you to invest in. Even it can be done through life insurance. I know one of the quality firms that I personally have an account with is Transamerica Financial Advisors. Now, in the description below, you will find a link to the index chart that shows the United States economy and the investment returns of the equity markets from 1925 till now. Make sure to download that.
Number 6, the stock market. Probably all this investment talk has your blood rushing. And the more you think about it, the more you realize maybe you can do better than 10% return per year. I'm sure you've seen Tesla stock prices increase 5 times its value since the March of 2020. And want a piece of the action. Let's be real. Statistically, no one beats the stock market in the long run. But every now and then, great opportunities present themselves. And for those who are willing to take the risk, you could win really big. The best way to learn is to simply invest a small amount of real money. Don't fool yourself trading with paper money or demo money and then playing it safe. You'll learn much more by having your hard-earned money in the game than if you just played pretend investor. The internet is filled with stock investment platforms. So be cautious which one you choose. But you should have no problem finding one that works for you.
Number 7, start a business with more passive options. It's time to get busy. If you had $1 million and want to invest it into the business, why not invest it to your own business? That way, you are taking all the risk, but you will also enjoy all the returns. Starting a business is a lot more complicated than having a job. It's more like you have multiple jobs and you're not getting paid unless the business survives and tries for a couple of years. Sure, the $1 million you have under your belt will prove to be quite an advantage and allow you to hire better people and buy the tools you need to accelerate your growth. But don't fall into the trap of overspending. Anyone can make money if they have money. The goal is to make money without spending any. As long as you have a frugal mentality when it comes to your own business, you will be able to grow it steadily and organically.
Number 8, angel investor. Angel investing is when a new startup needs money to help take the project off the ground. And if you're the one who provides that capital and expertise in exchange for a percentage of the business, with the age of tech startups pumping left, right, and center, everyone wants to think of themselves as an angel investor. But truth be told, that probably the highest risk option on this entire list. No matter how good you are, If the company you're investing in isn't the one to take the project where it needs to go, it will fail, and so will your investment. A seed investment varies between $10,000 to $100,000. This money is used to get the company to create what is called a minimum viable product. This is to help it pick up a bit of traction based on how well you do at this stage. You can then go ahead and raise more funds at a higher valuation. Seed investments aren't as complicated as they seem, but you never want to be what we call in the industry dumb money. Dumb money refers to someone who doesn't bring anything else to the table apart from money. Only invest in businesses you understand and that you have the expertise and the connections to help accelerate your growth.
Number 9, venture capital fund. Investing in companies is also evolving, and that's where the funds come in. Instead of handpicking 1 or 2 startups to invest in, you can take the index fund approach and pool your money together with other investors so that you can diversify your investment and minimize your risk. That's how venture capital funds came to be. Your $1 million investment could back 10 to 20 different companies. Statistically, 10 of them will fail completely. 5 will barely hold on for dear life. 4 will grow steadily, and maybe 1 will blow up. Your best bet is the money you'll make off of this one investment, and that will be enough to make you a great profit. These collective funds have grown in popularity throughout the world.
Number 10, crypto. You know how number 4 we talk about gold as a store of value? Well, for years it was the best option we had, until more recently when Bitcoin came around, which is why people call it Bitcoin Gold 2.0. We are strong believers in blockchain and what this technology will do around the world and in the future. And the idea that you could park money, that no government can print more of it, is definitely appealing to every investor out there. The price of Bitcoin at the end of March 2020, when the Bitcoin situation happened, dropped around 5,000. As making this video, the price is over 13,000. The entire ecosystem is evolving. The entire process becomes a lot simpler and linear to access.
If you have $1 million to invest, we've outlined what we believe would be your best options. You might find a combination of 2 or 3 of these investment strategies that would fit your personal financial situation. Remember, it doesn't have to be this or that. It could be a mix. Keep in mind, past performance does not guarantee future results. Meaning, what worked for your parents or you in the past, or that famous uncle, Daniel Clayton, who supposedly left that inheritance, may not be the right options for you during this economic market. When investing, be diligent and flexible. Do your study. That brings us to the main question again. What would you do if you had $1 million to invest today? How would you invest it? Remember, $1 million does not mean you are rich. Today, $1 million makes you upper middle class at best. Sorry to break it to you. When we were growing up, $1 million was the goal to shoot for because in our minds, that would have been enough to never have to worry about money again. Times have definitely changed though. Especially in the last 6 months, we've seen governments printing money like crazy. At the tune of $7 trillion, that's more than the US government has printed in the history of the United States. Inflation continues to go up as things are getting more and more expensive. And that financial milestone has been moved accordingly. Just like making $100,000 was huge in the 80s. Today, you make $100,000, you might still be living in an apartment. The $1 million milestone is no longer as rare as the unicorn it used to be. We're not there yet, but before you die, billionaire will become the new millionaire. Think about it. All it takes is for Jeff Bezos to crack that $1 trillion net worth, and suddenly the switch will happen. By the way, he is on track to get there by 2027, which is crazy. As of 2020, in this economic climate, in order to feel rich enough to not have to worry about money, you would need to be worth between $8 to $15 million. This would be enough to put you in the category of other high net worth individuals. If you're starting today, we don't recommend shooting for $1 million because then you're aiming too low. Instead, try to find investment opportunities that have the potential to go beyond 20 million, if they work out, of course. That way, by the time you hit it, with inflation being adjusted, you'd be just right. If you're going to work anyway, you might as well win big, right? You've heard the term, win big or go home. Keep these goals for yourself though. You are different from everyone else. If you told your loved ones that $1 million isn't enough money and you actually need $20 million to be rich, they will genuinely laugh at you and think you're insane. This is why you need to set big goals and keep them to yourself. Big goals scare people with little vision.
Thank you for spending some time with us. If you're ready for a big goal, please comment the word "Go Big" as your response to today's topics. That way we know the message got to all the right people. To keep us providing more content for your financial growth, make sure to share, like, and subscribe so you never miss another video. You can also talk to us on all of our social media or ask your questions directly on our website.